UPS and Amazon layoffs, signals of a changing logistics and retail landscape. In recent years, the logistics and e-commerce industries have undergone a dramatic transformation, accelerated by the COVID-19 pandemic and shifting consumer behaviors. Two titans of their respective sectors, United Parcel Service, UPS, and Amazon, have become focal points of this change, particularly as they announce substantial layoffs. These workforce reductions are not isolated events, but rather symptoms of a broader recalibration in the global economy, automation trends, and evolving market dynamics. UPS layoffs. Post-pandemic realignment. In early 2024, UPS announced plans to lay off over 12,000 workers, citing reduced demand for parcel delivery services and the need to streamline operations in the face of economic uncertainty. Most of the layoffs are expected to affect management and administrative roles, a shift from the frontline heavy cuts seen in other sectors. The decision followed disappointing fourth-quarter earnings, where package volumes failed to meet expectations. The layoffs come just months after UPS settled a new contract with the International Brotherhood of Teamsters, which secured higher wages and improved working conditions for more than 340,000 unionized employees. While this was hailed as a major labor victory, it also significantly increased the company's labor costs. To protect profitability and investor confidence, UPS has opted to downsize in areas that are less protected by union agreements, namely white-collar jobs. Carol Tomé, CEO of UPS, stated, "We are adapting to the realities of a softer demand environment and positioning ourselves for long-term growth." That softer demand refers to declining e-commerce shipment volumes compared to the pandemic-era boom when consumers turned to online shopping en masse. Amazon layoffs? Refocusing on efficiency. Amazon, which had aggressively expanded its workforce during the pandemic, has also announced multiple rounds of layoffs since 2023. By early 2025, the company had let go of more than 27,000 employees across its corporate, logistics, and technology divisions. Unlike UPS, Amazon's layoffs are part of a larger effort to refocus its sprawling empire, which includes retail, cloud computing, AWS, advertising, and AI research. The tech giant's most recent cuts affected its Amazon Fresh and Go grocery stores, its Alexa voice assistant team, and parts of its robotics and drone delivery projects. These moves suggest a strategic retreat from long-term bets that haven't generated expected returns, at least not yet. Andy Jassy, Amazon's CEO, explained that the company is prioritizing efficiency and innovation in our core businesses. Another factor driving layoffs at Amazon is increased automation. Warehouses are increasingly being outfitted with robotic arms, AI vision systems, and automated sorters. While these innovations promise faster and more accurate order fulfillment, they also reduce the need for human labor in some roles, particularly in lower-skilled areas. Economic and technological underpinnings. The layoffs at both UPS and Amazon point to several common threads. First, the post-pandemic economy is stabilizing. As consumers return to in-person shopping and discretionary spending contracts due to inflationary pressures, e-commerce growth is slowing. Both companies had ramped up capacity to meet pandemic demand, and now they're adjusting to a more normalized market. Second, both UPS and Amazon are facing margin pressures. Labor costs are rising, fuel prices remain volatile, and investor expectations for efficiency are higher than ever. Reducing headcount is a fast, albeit painful, way to manage these pressures. Third, technological advancement is rapidly changing the nature of work in logistics and retail. AI, robotics, and predictive analytics are automating tasks once performed by people. Companies are investing heavily in technology not only to reduce costs, but to enhance scalability and responsiveness to market changes. Human cost and workforce implications. While corporations present layoffs as strategic decisions, the human impact is significant. Thousands of workers, many of whom had stable careers, are now facing uncertainty. For communities where logistics hubs are major employers, these job losses can have ripple effects on local economies. There is also concern about the growing divide between blue-collar and white-collar workers. At UPS, unionized frontline workers are largely protected, while management positions are vulnerable. At Amazon, it's the tech and administrative staff being hit hardest, reflecting a shift in where value is being derived and lost within the company. Moreover, these layoffs may send a chilling message to workers in similar industries. If even giants like Amazon and UPS are downsizing, what does it mean for smaller players or those hoping for long-term career stability in these sectors? Government and public reactions. The layoffs have not gone unnoticed by policymakers. Labor unions, particularly the Teamsters, have voiced concerns about the implications of automation and cost-cutting for long-term job security. Some lawmakers are pushing for retraining programs and stronger social safety nets for displaced workers. There is also growing scrutiny of how large corporations manage labor during periods of record profits and stock buybacks. Critics argue that layoffs often serve shareholder interests at the expense of the broader workforce and community welfare. Looking forward, strategic repositioning or short-term fix. Both UPS and Amazon are undergoing what could be seen as strategic repositioning rather than crisis management. They are trimming excesses built during the pandemic boom and investing in areas poised for long-term growth, such as automation, AI, and sustainable logistics. For UPS, the focus will likely remain on high-margin business-to-business services and international expansion. For Amazon, the priority is profitability across all business units, especially AWS and advertising, which have become crucial revenue drivers. However, the success of these strategies depends on external factors: consumer spending trends, regulatory environments, and the pace of technological adoption. If companies overcorrect, they risk eroding employee morale and losing talent to more agile competitors. Conclusion. The layoffs at UPS and Amazon are more than just cost-cutting measures. They reflect a larger transformation in how the logistics and tech-driven retail sectors operate. As companies navigate a complex environment marked by economic uncertainty, technological disruption, and changing consumer behaviors, the balance between efficiency and human capital will remain a central challenge. For workers, adaptability and reskilling will be critical. For businesses, strategic clarity and social responsibility will determine not only profitability, but long-term relevance in a rapidly evolving world.